Hello and welcome to another interview at the iFX Expo International. This time we are joined by Lux Thiagarajah, the Chief Commercial Officer at OpenPayd. Lux, thank you for being here.
No, thank you for having me. I appreciate it.
So, OpenPayd has recently gone public.
Well, we've announced the news that we will be going public at the end of this year.
Yes.
What means?
So, how does that change in any way the way you approach your commercial strategy?
The honest short answer is no, really. Right? If I look at what OpenPayd have done in the last years, we are now at a point where we are processing annualized about 250 billion a year in payments. We grow our client base on a yearly basis of about 32 to 33%. We've had grown volumes year on year 56%. We've grown revenues 45%. For me, anything that changes from this, that doesn't change who we are and what we do. For me, it's a case of having a product and services our clients, and how do we keep growing those volumes in that client use case. And whilst the news about us intending to go public on the Nasdaq later this year is phenomenal in terms of how we operate and what our goals are,
it doesn't change anything. Yep. Okay, so I want to talk stablecoins. The optimists will say that stablecoins are the swift killer. They will replace completely the decades-old correspondent banking system. Where do you stand, given current trends?
Yeah, it's an interesting one because I've heard that crypto and stablecoins was always going to be the swift killer and it's the new way of moving money. I actually disagree, personally, because when I look at the use of stablecoins, and let's be clear, in the last 2 years, stablecoins can now no longer be called crypto. When we first started talking about digital assets, we thought Bitcoin, Ethereum, USDC, etc. Stablecoins now has its own use case. Like when you look at your total market capitalization of stablecoins, despite whatever Bitcoin does, whether it goes down, it's a bear market, stablecoins keep going. So we can clearly see there's a use case for stablecoins, and it's now payments cross-border trade.
They keep true to their name.
Exactly. Yeah. It's stable and immutable. However, if you look one level below, it's underpinned by fiat movement. Right? It's either the initial movement from fiat to stablecoin, or it's the last mile stablecoin to fiat payout. Either way, there is a fiat element. So do I think it replaces the swift killer? No. Do I think it completely eliminates the need for traditional payment rails? Absolutely not. I think with stablecoins, what's important is it's that interoperability layer that connects the traditional fiat rails, like Swift or like SEPA or like FPS or like PIX in Brazil, but you connect that with blockchain. And stablecoin then is the settlement layer. And I think that's where we're going to, but do I think it replaces the Swift sort of fiat rails? So I think it still needs fiat.
That would be their role in the ecosystem, to be the settlement layer.
It's the settlement layer. And I think for people like OpenPayd, we provide that interoperability to say we can connect you to SEPA, FPS, to Swift, but hey, we can also connect you to USDC, RLUSD, USDT on Ethereum and Solid. And we in the background are removing that complexity to let our clients be able to settle cross-border payers. But no matter whether you use stablecoins in some form of a settlement layer, you still need those fiat layers there. So for me, it's marrying those two together.
And in terms of, let's say, jurisdictional usage, do you see stablecoin being used more in certain regions rather than in others?
Yeah, and listen, absolutely. Not like you said, it says what it does on the can. Yeah. It's stable. Now, where do you really think there's instability? I think emerging markets, right? If I look at Turkish lira, if I look at Argentinian peso, and listen, I'm an ex-FX trader. If I looked at 1 year volatility on these FX currencies, it's significant, right? In some cases, like 30, 40%. If I'm a local person living in Argentina, would I want to keep my own wealth, my savings that my family are dependent on in a local currency that could lose its value to up to count of 40% in a year? Actually, no. And so I think you're seeing stablecoins being used for a myriad of reasons. One, there's the adoption for cross-border settlement, that's fine. But I think then you then look in the emerging markets, it's being used as a hedge against wealth, right? Against volatility, against inflation, against FX risk. So I think we see a lot, and there are certainly stablecoin issuers who do well in those regions, but I see it a lot more in emerging markets, your Turkeys of this world, the Latams of this world, etc. And I think that continues to be the case.
And I guess there must be also something to be said about the power of habit. In the UK, where you have a pretty successful and stable banking system, and people have had the habit of using that system for so long, it's very difficult to transition them into a new system.
Yeah, it's interesting, right? So, I mean, if we're talking about stablecoins, for me, if you're a client of mine, I don't want you to even think about stablecoins. That's my job. I want you to have a sterling account with OpenPayd. And you then say to me, Lux, my business, I need to make a payment out in Mexico, just like I do with my HSBC account. The role of the stablecoins is that's OpenPayd. In the background, we will take care of that sterling to stablecoin move and the stablecoins, Mexican peso and a payout. From your end point of view, as long as you just click a button, say, I want to instruct a payment from my UK bank account and I need to make a payment to a provider in Mexico, we will take care of the rest. So I agree with you. I think if you introduce new things to people, it's tough for them to get used to it, the new world order, especially when you think of stable coins. There's still this connotation to think crypto and think, oh, is it stable? Or, how does it work? So let's remove that complexity away from it. We will use it as a transactional layer in the settlement layer. From an end user point of view, you have just made a payment out from the UK account into Mexico. We take care of this. I think if you can make the experience like that a lot more seamless and a lot less involved for you in something new, that's where I think the end is, and I think that's where you get adoption.
All right. I want to expand our picture a bit. To me, the global payments, ecosystem currently looks like a Jackson Pollock painting. It's very fragmented. So, firstly, how does keeping up with this fragmentation feel like for a company like yours?
Listen, it's one that I always think about, right? So when I look at OpenPayd, for example, we are absolutely, you've heard our numbers, we process hundreds of billions a year. We're a big company in the Europe and UK. However, our licensing and etc. means that we can only offer that service in Europe and UK as well as I'd like to. Ultimately, you need to be multi-licensed, etc. The reality is this: the payment ecosystem will remain fragmented because what works for UK, for example, faster payment schemes, will not work for SEPA in Europe, which will also not work for BLIK in Poland, which will also not work for PIX in Brazil. And then you've got India and their local system. So everything will stay fragmented because what works for the UK for a local payment scheme doesn't necessarily fit everyone else around the world in their jurisdiction. So then you've got to think, okay, where can we come in? For me, it comes to that interoperability layer where firms like OpenPayd can say, we will go and plug into the local systems, and what we will create is that settlement layer, that interoperability system that lets you talk to different systems. We will take care of the regulatory framework. We will take care of the tech framework. And we see already, we have one API. Our single API integration gives our clients the ability to do payments, to do FX trading, to do crypto trading, to do stablecoin settlement. So we will do all of the heavy lifting. Behind the scenes, we will ensure that we are multi-licensed. We are banking with the right regulator or the right jurisdictions. We will plug into the local payments so that our clients don't have to worry about it. But the reality is, the payment systems will stay fragmented. There is no way you will get one local rail that fits all. It is now on the providers like us, like OpenPayd and other EMIs and other bank providers, to then go plug their technology into these local systems and then provide one unified, interoperable system for our clients. That means they don't need to worry.
So you don't see the industry following the historical rhythm where after fragmentation there is consolidation?
No, I can't see how Brazil will adopt what we adopt in SEPA, instant SEPA. Every single jurisdiction has its own nuances, and its local payment rails will fit its own jurisdiction, its own needs and wants. What works in emerging markets like LATAM or what works in Asia, very different to what works in Europe versus what works in UK. How do you consolidate that? I don't think you can at the local level when it comes to the local payments, but where you can consolidate it is the layer above, which is where we sit, and we will consolidate it via one API, one product offering. That's where the consolidation could happen. I don't think it happens at the payment offering.
Right. Now I'm gonna switch gears. OpenPayd's founder, Ozan Ozurk, recently remarked that the next decade won't be defined by faster cards. It will be defined by money that moves on its own. So how do we bridge the gap between the current reality with this vision of autonomous programmable money?
Right. Yeah, I mean, I definitely don't want to sound like a broken record, but it starts with that interoperable settlement layer first, right? That's where it needs to start. Before you can even get to programmable money, how do you have one API that can talk to different payment firms? So it has to start there. I think once you then have programmable money, I think that's where the future is going. You know, everyone wants to talk about AI, and I'm sure you will ask me at some point about AI.
That was my next question.
Right, okay, in which case I will not get into that now, because we can get into AI and where I think that goes with agentic payments, etc. I think when we look at programmable money, for me, that really, it starts with like, let's build that interoperable settlement layer first. So OpenPayd now, we've got local rails in Europe. We've got local rails in UK. Later on this year, we'll have local rails in the US. Okay, that's next. The next phase will be, okay, do we want local rails in LATAM, etc. We will then take all that, we will create the settlement layer, and then we will have programmable money movement. Programmable money movement starts for me with also the stablecoins, like the cross-border payments. Like, say recently, we've joined the Circle Payments Network and the Fireblocks Network for payments. We are able to do a UK to Mexico payment in less than 45 seconds. That's just unheard of. If you go to your normal banking provider now and say, I need to pay for my European account or your Euro account or your sterling account to pay into Mexico, we're looking at a T+2 settlement with corresponding charges, FX charges, etc. This was cheaper, faster, a lot more faster, and you get a lot more clarity. That to me is where the programmable layer covers next to. And I'll wait for your next question before you get into AI. But I think we're now at the case where we need to build a regulatory framework that can support all these different payment networks. And innovation and regulatory framework needs to work at scale. And then you have that programmable money movement.
So I'm going to surprise you with a question about AI.
There we go. It's the buzzword of the year.
I mean, we have to talk about it.
Of course.
It's going to be the buzzword for the next couple of years, I think. Okay, how does Gen AI change the field in payments?
So I'm going to answer it two ways. I'll answer it with what I think and what I know the world is. I'll answer it. So for me right now, I think a lot of AI is more inward facing for us as a company. So we've deployed machine learning when it comes to transaction monitoring, fraud assessment, risk monitoring, etc. I think there's a huge use for AI in every single function, every single team of OpenPayd for sure, but let alone not only us, I think in every company. I think there's a role for AI to play. Like, I look at the AI agents, but I think they have, and it's crazy what these AI agents can do. It feels like we're talking to a real human being, and it takes a lot of operational burden off of our teams. At no point do I subscribe to, you should reduce the workforce. I think we work in hand with AI. It can free us up to do a lot more.
I mean, you can view it as a cost reduction tool, or you can see it as a cognitive abundance tool.
Agreed. And I view it as an enhanced offering. Like I want to work with AI. I don't think AI replaces everyone in my team or anyone's team. It's more like, how do we make you either more free to focus on more important stuff and not bogged down in more operational menial tasks? Well, that's where AI can come. Use AI to now, then there's the other side of AI, and all I hear is agentic payments. And I would be lying if we weren't looking into it. The problem is, I think everyone views agentic payments as this amazing thing that's going to change. I don't really see the uptake now. So when I look at AI on the payment side, and everyone's talking about agentic payments, and there are big merchants like Shopify, etc., or initially saying we're going to use them, but kind of roll back from there. I think everyone's looking at it and is ready to use it or explore it if need be. I don't see the adoption there yet. So for me, the role of AI is much more internal facing for now. And where it can help our clients is, again, AI agents, that kind of first level of support. And we've started that process. We've started embedding it and we'll keep growing that. But do I see it in the forward-looking AI agentic payments use case? I haven't seen the adoption yet. And I question whether it will take.
What do you think is holding the adoption back?
I think it's a trust thing. It's my honest truth. Would I honestly feel if I wish I had millions sitting in my bank account.
We all.
Exactly. But if I truly had millions sitting in my bank account as a business, would I trust AI to run my payments and do my payments and decide when to make the payments? You know, I come from an FX background, and I saw the evolution of FX go from manual trading, where people were trading in billions when I was at JP Morgan and they wanted to speak to a human, to suddenly the evolution of, you know, electronic FX. And don't get me wrong, electronic FX is huge. But there is a reason that all the banks now, investment banks, your JP Morgan, your Goldman Sachs, there is still a human presence FX to us. It's because when the big hedge fund managers or asset managers want to do a massive ticket, they want the human. They believe that it's that trust in it. Do I think people have bought into that trust? No, I think it's a trust because I'm speaking of my opinion. If I ran a multi-billion-pound business, would I really employ AI to decide when to do the payments and make the decision for me? I would personally struggle.
Yes, especially with how many hallucinations these AI agents have, especially if you are talking about general systems. Yeah.
And that's not to say I don't think it changes. Listen, I think AI is phenomenal. I just think in the AI agenda, in the agentic payments thing, it's early. We're very early. All it will take is one or two big names to show the rest of the market, and everyone, us included, will rush. But it's the question of who's the first mover, and are we there yet? I don't think we're there yet. But are we absolutely doing the due diligence, the research, so that we're ready to move on it? Absolutely.
Lux, thank you so much for your time.
No, I really appreciate you guys. And look forward to speaking to you guys in the future.
Thank you.